You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Friday, 21st day of February, 2025. Thanks so much for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first live broadcast is our live training room. So that one's private, members only, and those who are taking their 1-week free trial. If you haven't taken your 1-week free trial, when Michael comes on in a bit, he'll walk you through step by step. We'll get your indicators up and running today. You'll have the weekend to kind of get familiar with them. And then you get 5 consecutive trading days next week with access to everything a passport holder has access to. No credit card required. Now, when the live training room ends each day at 11:30 a.m. Eastern, take a 30-minute break and then come back for this broadcast, the afternoon broadcast, which, unlike the morning broadcast, is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. Now, there's 2 different ways you can join this afternoon broadcast live. I'm going to give you the best way first, because you only have to do it once. Go to mytradingiq.com. Scroll down to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day you'll get an email about an hour before this broadcast starts. In the email there's a link, so at 12 noon Eastern, all you have to do is click the link in the email and it'll automatically log you into our platform. The benefit there is you have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, but you still want to join live. And some days you'll be busy, can't join live, but you want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. You already know the youtube.com part, so all you got to remember is CFRN. youtube.com/CFRN. Not only do we broadcast live every trading day, as we're doing right now on our YouTube channel, simulcasting if you will, but we also archive each and every daily broadcast. Currently, there's over 2,700 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week, but thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. You're able to see how we've evolved over the years, from where we started to where we are now. Obviously, you're not going to watch them all. Yeah, but just poke around. Just pick some days at random. See how it all came together. youtube.com/CFRN. This is our afternoon schedule each and every day. So we'll get started with our daily devotional. We started a new topic yesterday, how to overcome negative thoughts. Now this may not pertain to you, but most people, they've had one or two, maybe a few. Our scripture is Matthew 11:28 through 30, and I'm going to share it from the Message translation. Are you tired, worn out, burned out on religion? Come to me. Get away with me and you'll recover your life. I'll show you how to take a real rest. Walk with me and work with me and watch how I do it. Learn the unforced rhythms of grace. I won't lay anything heavy or ill-fitting on you. Keep company with me and you'll learn to live freely and lightly. Matthew 11 verses 28 through 30. Overcoming shame. Negative thoughts come from different directions, but they often lead us to feel guilt and shame. Shame can make us feel like our bad choices make us bad people. Over time, toxic shame can keep telling destructive lies that erode our mental health, self-worth, trust in God, and relationships. So, how do we stop shame from stealing our lives? We stop believing the lies it tries to tell us and embrace the truth of Jesus instead. Yeah, most of us at some point in time have asked, is God angry at me? Shame can convince us that God is strict, impatient, angry, and ready to punish rule breakers without mercy. But God isn't like that. Sure, he can get angry when people make choices that hurt others, but he loves people and is eager to offer second chances. If you feel like God is constantly angry or disappointed with you, remember these words of Jesus. Now here's that scripture from the NIV. Come to me, all you who are weary and burdened, and I will give you rest. Take my yoke upon you and learn from me, for I am gentle and humble in heart, and you will find rest for your souls. For my yoke is easy and my burden is light. Jesus is God, and he's telling us what he's like. He's not a ruthless dictator judging our performance from heaven. Instead, he's right beside us, offering us support as we follow his example. So you don't need to run or hide from him. Instead, let him help you. Let's pray. Heavenly Father, thank you for your invitation to come to you when we are weary and burdened. We lay our struggles at your feet and receive the rest that only you can give. Teach us to walk in your ways, for your yoke is easy and your burden is light. Fill us with your peace and help us to trust in your gentle and humble heart. It's in Jesus' name we believe and pray, and everybody said, amen. Amen, and happy Friday. Everybody's been working for the weekend, and here it is. Make it count. All right, let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. Currently, the Dow is down 382 points, almost 1%. NASDAQ down 174, almost 1%. S&P 500 down 39. And the Russell 2000, our man in the street, down 29 points, which is a little over 1.25%. In the commodity basket, crude oil down $1.50, trading 70.98 last. That's a drop of a little over 2%, or $1,500 per contract traded. Gold down $4.40, trading 29.51.80 last. Silver down 37 cents, trading 33.11 last. That's a drop of over 1%. In the Asian markets at the close, the Nikkei posted a gain of 98 points. Shanghai rose 28. The Hang Seng gained 900 points. That's 4%. And in the European markets at the close, FTSE down 3.5. The DAX down 27. The CAC up 31. So we had a green day in Asia. It was a mixed day for the UK. And it is a big red Radio Friday here in the US of A. For those of you that were in the workshop last night, I posted a chart this morning in the discussion group, but what we discussed right at the very beginning of the workshop last night. So if you remember and you missed the workshop last night, make sure you watch at least the first 10 minutes. You should watch the whole thing, but we talked about what might potentially happen today, and well, you'll see it in a bit when we go to the charts. From Capitol Hill, Senator Mitch McConnell announced yesterday he will not seek an 8th term in the Senate next year, almost a year after his decision to relinquish the top role in the upper chamber's GOP. The announcement came on the Kentucky lawmaker's 83rd birthday and prompted several state politicians to express interest in replacing him. Elsewhere in the Senate, former terrorism prosecutor Kash Patel was narrowly confirmed as FBI director in a 51-49 vote, with 2 Republicans voting against him. Well, I guess it takes a lot of guts, we'll call it guts, to vote opposing all of your teammates. I mean, the whole idea is that, no matter which side of the aisle you're on, if you're in Congress, we're Americans, so we should all be on the same team. But our forefathers had the wisdom to give us a two-party system. So no surprise that all the Democrats voted no. But these Republicans, I don't know. You figure it out. It makes my head hurt. On Wall Street, what do we got? United Health Group had another rough day today. fact, United Health is down almost 9% on the session. Reports that the Department of Justice is investigating its Medicare Advantage insurance business sent the stock, again, more than 8% lower so far. The civil fraud investigation, now that 8%, you probably don't know how much that is unless you own United Health. That's a drop of $44 per share. Currently trading $458 a share. The civil fraud investigation, first reported by the Wall Street Journal, examines how United Health records diagnoses that boost payments from the Centers for Medicare and Medicaid Services. CMS pays private insurers lump sums to provide alternate Medicare coverage. In a statement Friday, United Health called the report, what's the word? Misinformation. Okay. You know, everybody keeps squawking about how the new administration, they're going to take away Social Security, they're going to take away Medicare, Medicaid. Nothing could be further from the truth. What they're doing is they're trying to root out the corruption, the fraud, the waste, and the abuse to ensure that those who receive Social Security, Medicare, and Medicaid continue to receive it. Elon Musk, in his interview with the president that I recommended everyone watch, Sean Hannity, interviewed them together in the Oval Office. Elon was rather blunt. He said, if we don't do something fast, America will go bankrupt. Now, this comes from the richest guy in the world who's built many successful businesses. So whether you like him or don't like him, it doesn't matter. When it comes to business, he knows a thing or two. And so really what the current administration is doing is they're trying to run the country like a business. Okay? You got to make more than you spend, and if you don't, you end up upside down. And we're only upside down as a country by $36 trillion. DEI. The retreat from corporate diversity programs widened this week as Citigroup and PepsiCo announced rollbacks of their DEI policies amid mounting scrutiny from a new administration in Washington, D.C. At Citigroup, CEO Jane Fraser announced in a memo to company employees that the New York banking giant would no longer require new hires to be selected from a diverse set of job applicants. She also said that an existing diversity, equity, and inclusion and talent management team would now be known as simply the Talent Management and Engagement Team. It is important to note that we're living in an environment where things are changing quickly. They really are. Heads are exploding all over the aisle on the line. PepsiCo, the beverage giant, said in its own memo from CEO Raymond Lagarde that it will no longer have a DEI officer dedicated specifically to such issues. They're going to sunset the DEI workforce representation goals and expand its supplier base. The company, he added, will be adding a new inclusion for growth strategy that is in keeping with our company's deep history of building an inclusive and respectful workplace culture. But the big difference has nothing to do with your biological sex, male or female, or the color of your skin, or your heritage. It's based on merit. I mean, think about it. If you were going to start a company, would you want to hire the most qualified people you could find for the job? Yes. Is that discrimination? No. It's common sense. U.S. existing home sales dropped more than expected in January after 3 straight monthly increases as high mortgage rates and house prices stifle demand. Home sales decreased 4.9% last month to a seasonally adjusted annual rate of 4.08 million units. Economists polled by Reuters had forecast home resale slipping to a rate of 4.12 million units. Sales likely reflected contracts signed in November and December. The average rate on the popular 30-year fixed mortgage increased from 6.72% at the end of October to 6.85% in the final week of December. Home resales increased 2% year on year in January. Mortgage rates have refused to budge for several months despite multiple rounds of short-term interest rate cuts by the Federal Reserve. That's a bit alarming, don't you think? Now, Elon, again, like him or not, I believe he speaks the truth. And he has once again suggested that the Federal Reserve should undergo closer scrutiny, saying Thursday at a gathering of conservatives that he plans to audit the central bank. And boy, are people freaking out. This has never been done. Now, if you got nothing to hide, you got nothing to worry about. But I can only imagine the things he's going to find. I don't have to tell this audience, but the Federal Reserve is not a part of the federal government. No more than FedEx. It is a privately owned corporation. He didn't elaborate on his specific plans beyond answering yes on stage at the Conservative Political Action Conference when asked if that's something he intended to do. But it marked the second time this month that the head of DOGE endorsed a closer look at the Fed, an independent agency that decides the direction of interest rates and regulates the nation's biggest banks. And they may have managed to get us $36 trillion in debt. It's going to be interesting to see that audit. From Reuters, Wall Street stocks could be facing a correction because of ructions in the options market. According to Goldman Sachs, roughly $2.7 trillion of U.S. stock market derivatives are due to expire on Friday, which, if not exercised, will put pressure on stock markets and stoke volatility. Now, why is this so important? The S&P 500 and European stock markets hit record highs on Tuesday, but have since declined amid Trump's latest tariff warning on pharmaceuticals, semiconductor chips, and wood, which, among other threats, has exacerbated fears of a broad trade war and unnerved investors. Stock buying might be slowing for other reasons as well. Retail traders in the U.S. are trading less because they'll have to pay their annual taxes, and average flows from retirement funds into mutual and exchange traded funds typically taper in March. About 2.7 trillion of equity options or derivatives that allow a trader to bet that a stock will reach a certain price expire today, according to the Goldman note. Well, That's explained in the chart we're going to look at in a minute. U.S. prosecutors and regulators are investigating a $32 million deal between CrowdStrike Holdings and a technology distributor to provide cybersecurity tools to the Internal Revenue Service, according to two people familiar with the matter and a document seen by Bloomberg. Investigators for the Justice Department and the SEC have been interviewing people and collecting records related to the deal, according to the document and the people, who of course spoke on condition of anonymity because they're not authorized to discuss the matter. So you always got to take that with a grain of salt. Somebody's willing to put their name on it. In the last, U.S. consumer expectations for long-term inflation rose to the highest rate in 3 decades on concerns President Donald Trump's tariffs will translate into higher prices. Consumers expect prices will climb at an annual rate of 3.5% over the next 5 to 10 years, according to the final February reading from the University of Michigan. The rate is the highest since 1995, based on data compiled by Bloomberg. All right, strap in. Going to be a bumpy ride, I suspect. On the home front, Logic 247. That's our 24/7 around-the-clock E-mini alert service. It's not just E-minis, it's also crude, gold, silver. We're in week 342, and over the last 342 weeks, we've issued over 19,000 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Valerie did this recap this morning at 6:30 a.m. Eastern, so some things have changed since then, but she will update it and finalize it for the week this afternoon or tomorrow morning. But at the time she did the recap this morning, 6:30 a.m. Eastern, we had issued a total of 32 alerts. We issued a couple more since then. At the time of the recap, we were still waiting on the outcome of 11. That gave us 21 actionable alerts, of which 4 or 19% would have been stopped out. Again, based on market structure and that simple process we teach all of our passport holders in their one-on-one mentoring sessions. Now, at the beginning of the week, we were at 100%. We issued 8 alerts. We were waiting on 7, and we had 1 stop out. And the following day, that dropped to 33. Then it dropped to 23. And now, as of this morning, we dropped to 19. But we had a whole lot waiting. Plus, I put out a few more. So, we'll see where we end up for the week. Now, it's been a light week. Market structure just has not been. If you go back and look over the 342 weeks, probably the average number of alerts on any given week is somewhere between 50 and 75. There have been weeks when market structure allowed us to issue over 100 alerts. And we've had weeks where as little as 0% got stopped out. And we've had 1 or 2 weeks, I think, where we ended up above that 20%. So that could happen this week based on what happens with these waiting and the ones that were issued today. But you'll see it in Telegram and the discussion group when she finalizes it today, this afternoon, or tomorrow morning. Now, the purpose of the logic alerts, yeah, you can trade them, but the real purpose is to help you learn how to read a chart. You should be able to look at any chart of any market, any time frame, and with the use of our humble indicators, instinctively know what the next high probability move is. If you use the 247, whether you trade them or not, if you just use them for the purpose of learning how to read the chart, it will really speed up the process of you learning. You need to be able to look at a chart and instinctively see where potential resistance looms, where potential support is, and be able to see the windows of opportunity in between. The logic alerts have an entry price, an initial target, usually additional targets, and a final trade to target. The logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. Now, 342 weeks, that's a very long time. But long before we had Logic 247, we had our original alert service, the concierge trade alerts. And yes, they're different. Number one, they don't come out around the clock. They're posted as a static report, either shortly before the Globex open each evening or shortly after. Last night it was shortly after. The previous night was shortly after. Tuesday night it was 5 minutes before the open. I always try to put a post in the discussion group that lets you know Hang on 1 second, guys. I'm hearing an odd noise, but I can't figure out where it's coming from. Oh well, I guess we'll just keep going. So last night, the CTAs came out at 6:35 p.m. Eastern. So when we go to the charts, we'll be looking at the 30-minute charts. So just keep in mind, we were 5 minutes into the second candle when these targets were published. All of our members, all of our trial members, had all of these targets 35 minutes after the open last night. The S&P, the Dow, the Russell, crude, the NQ, gold, and silver at 6:35 p.m. Eastern. And when I'm late like that, then I put a note in the discussion group that says the CTAs are out. So those that follow them can go and check. Man, that high-pitched noise. I don't know. Anyway, let's go look at the charts on this Friday. All right, we'll start with the daily chart of the S&P. Now, you're in the workshop last night. Price was up against resistance times 2. The step line and blow and climbing. When they get directly above price, they become potential resistance. And so in the workshop last night, and as I said, if you weren't there, you really should, take a few minutes and check it out. I talked about this at the very beginning, right after the opening prayer. But I said we could see tomorrow we have some high impact news. And while I said, yeah, we could break the all-time historic high, my feeling is that we're going to see a candle that takes us down to the BBC and this trend line. It's actually traded lower than where I anticipated, and I think it's going to go lower because obviously the institutional traders, the ones who move price, they're not in a buying mood today. So could we see a last minute rally going into the close? I suppose we could. But what you should probably be doing is looking for where the market may find support. Okay, this low right here. What is it? 60.53 half. Potential support. Right there. The low of that candle is 60.20 3/4. 60.14. 59.87, and then you're at the 24% fib retracement. Any one of these areas could be potential support. Now, the green lines, the BBC, stands for bull bear cross. When price crosses above the green line, we're bullish, expecting higher prices. Below the green line, bearish, expecting lower prices. Institutional traders look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has everything to do with account size. I encourage you to spend 2 minutes, whatever you trade, stocks, futures, crypto, Forex, whatever. I encourage you to spend 2 minutes with the daily chart before you drop to your smaller time frames and actually start trading. Number one, it gives you a peek over the shoulder of the deep pockets that move price, because if you're trading against them, well, just remember, they're the best of the best. They got huge accounts, they move price. It probably makes more sense to do what they're doing. But anyway, now price didn't move on the daily. It looks like it just was a straight drop. Oh no, there were legs and retracements and legs and retracements and legs and retracements. But when you look at the daily chart, not only are you able to see what the deep pockets are up to, or days like this when they're filled with indecision, that little doji there, but you know where potential resistance is. We talked about this resistance last night, and as I just showed you, you know where potential support is. That's market structure. Okay, that's part of learning to read the chart. Now, the 30-minute chart, that is where all alerts are created. The logic alerts and the concierge trade alerts. Nothing magic about 30 minutes. It's just a time frame I've used for years. If it's not broke, I guess they say leave it alone, so that's what I've done. This was the opening candle last night. It was 5 minutes into the life of this candle, okay, when the CTAs were published. Now this candle itself opened at 61.35.75 and ran up to 61.39.75. So there was 4 points in that one candle. It only takes 2 points to get you go for the day. But price was right at a weekly zone. And we know that 70% of the time when price encounters a weekly zone, what do we get? Consolidation. 20% of the time we get rejection. 10% of the time we get the slice. Now here we sliced across an entire zone, but when we ran out of steam, we retraced back to that zone, the last zone sliced through, and continued in the direction of the slice. You'll see that about 10% of the time. So after the brief open, where you'll notice that this high from yesterday, that was 61.39.75. This high was 61.39.75. Okay, So that set the tone early on. We came down to the BBC, we consolidated sideways for hours, pinging back and forth between the BBC and the zone. We finally broke above the zone, but we never quite made it all the way to the long target. Right here, 9 o'clock this morning, and then here's the 9:30 open, and the 9:30 open took us right down to the short target. We traded through. Now on this slice, because of the lack of buying interest, the market made a feeble attempt to retrace back to the zone it sliced through, but we just kept dropping. Now, notice that the step line, the black line, it's starting to curve to the right. In fact, it's directly below red and climbing. If the step line crosses to the right side of red and falling, then we expect price to retrace or attempt to retrace back to the BBC. It happens over and over, again and again. Step line crosses red and falling, price retraces to the BBC. Price always reverts to the mean. In our case, the mean is green. It's called the BBC. Now, this is the lowest weekly zone for the week. Is it possible that we hit it today? It is. But we'll just have to wait and see. The only bullish thing I see on this chart is the fact that this is starting to lean to the right. But price is still dropping. So on the Dow, this is where we opened last night. The vertical lines separate today, Friday, here's Thursday, here's Wednesday. When price rises to a weekly zone, we expect resistance. When it drops to a zone, we expect support. Up to a zone, resistance, until proven otherwise. So we're now below the lowest weekly trading zone on the Dow. Now the step line here has already crossed red and falling, but I don't see any signs of a recovery. We've published the zones for over 15 years, every week for our members and trial members. Based on that history, by close of business today, price should be at or above the lowest weekly zone. This time it may not happen. Has that ever happened before? Yes. Over 15 years. I don't have an exact count, but it's been a handful of times, 2 handfuls. On the Russell, this was the open last night. We consolidated right below the BBC, finally got above it, got above the zone. Now the pullback to the BBC holds more often than not. So we get a leg and we hit the long target. That candle opened at 71 and ran up to 75, so it was 4 points. 3 points to the target, but we traded a little above the target. And we got a retracement, and we got another leg. Okay, now this high here, 2286.7, 2286.1. So we had a high, a lower high, and then a lower high. That in and of itself is a sign of weakness. And at 9:30, look at that huge candle. And then we hit the short target. Now we're sitting right on top of the lowest weekly trading zone for the week on the Russell, 2223/24. The zones are published Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. When Monday's a holiday, as it was this week, then they come out Tuesday morning at 6:15 a.m. Eastern. But again, once they're published, that's it. They're carved in stone for the entire week. On the NQ, this was the open last night. We're above the BBC. We've got blue and climbing, so we naturally anticipate higher prices until we run into an obstacle. Now this was resistance times 2. The zone and the bearish cross, where the red line gets below the green line. When you have a bearish cross that leads to an extended move, which found support at the zone, the first time price revisits that area will almost always be good resistance. And it was. But you had 2 reasons to expect this to be resistance. And it was. That sent us back to the BBC. We overcame red and falling. We got a leg, we got a retracement, we got a leg, and then there's that 70% of the time consolidation at the zone. And then we finally made it to the long target. And we put in a high today at 22,245. $22,247. So we failed to take that out, and the rest is just brutal. Now, this is the lowest zone on the NQ. Could we get there? Yeah, we could. The step line is starting to lean a little bit to the right, but price is still dropping. And you can see how we consolidated here, wide-ranging consolidation. That's what you expect 70% of the time. Crude oil. This is where we open. We got a little pop higher, and then down we go. We get below the BBC. We hit the short target, get some consolidation at the zone, and we get a leg, a retracement, a leg, a deeper retracement. Now the pull back to the BBC held, but look, this was a huge green candle all the way up to the zone, which we expect to be resistance till proven otherwise. Reached up and touched it like some obsessive compulsive kind of thing, but the pullback held. I mean, as it was happening, you can imagine with this huge green candle, oh man, we're just going to crush through that zone. But we didn't. We continue to drop. Now we're consolidating, and look at the step line. It's starting to hook to the right. Okay. So are the lows in for the day? Yeah, I'm not going to say. There's so many factors. And this has not been a normal week by any stretch, aside from the fact that it was a holiday. Gold. This was the open last night. We got above the BBC, and we hit the long target. And that long target was based off this high, right here, market structure, boom. Resistance will always send the market looking for support, which it found at the short target. From resistance to support, back to resistance at the BBC, back to support at the target. We consolidated, reached down, hit the zone, bounced all the way back up, support all the way back up to the BBC resistance, which sent us back down through the zone, and then we just consolidated sideways. Okay, came back down to this zone one more time after overshooting it earlier. This time it held. Okay, so where are we now? Well, the next resistance, 29.56.9. We're currently at 54. So look for potential resistance at 56.9. And then again at 61.9 if we continue climbing. Remember, we got to overcome these obstacles to continue climbing. So is it possible gold could see the long target for a second time during this session? I think so. Silver. Silver has kind of been stuck in this zone for the last 3 days. Friday, Thursday, Wednesday. From resistance to support, back to resistance, back to support. Now we're just consolidating at the zone. It only takes 2 pennies in silver to get your goal for the day. Margins are high, and I wouldn't call it a beginner's market. You know, maybe pick something other than silver when you're learning to trade. But once you've learned to trade, then silver can be a good market. A 2 penny move is enough to give you your goal for the day. Okay, so all eyes right now should be on 60.53 half. Now, that's quite a ways below where we are right now, but that's your next support. And so if we don't get there today, be sure to remember it when the market's open Sunday night. Our lowest weekly zone is at 60.63, which is right here. So this panned out pretty much the way we theorized last night, just simply by reading the chart. You can't let emotions get involved. Well, there's no way we can go higher from here. There's no way we can go lower. Those are going to get you in trouble. So stay away from that. Okay. Now we've got this basically a double top right up here. One's a little, let's see, this one has a high at 61, 62 and a quarter, 61, 66 and a half. So this is a slightly higher high, but the market has done everything today that we discussed last night, and it looks like it wants to do more. To become a member, send an email to support@cfrn.net. In the subject line, just put "I want to become a member." In the body of the email, put your name, your phone number. We're not going to call you, but we will send you an email that explains what it means to become a passport holder, and there'll be a link you can click to actually seal the deal. Michael's here, so he's going to give us a recap of what happened in the live training room this morning. Then do some live trading on the TradingView platform. And when he's done, I'll come back and wrap the week up with our good word for the day.
All right.
Okay, looks good.
Ready?
Yes.
Good. All right, here we go. Let me bring it up over here. Good afternoon, everyone. Happy Friday. It is the 21st day of February 2025. Now, if you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. When you click that, there is no credit card required for the trial. No credit card required for the trial. Just click on the purple button and it will bring you to this page right here. On this page, all that we ask for is your name, your email, and your phone number. Down here at the bottom, if you have Ninja and you want to use the charts that we have on Ninja, you can give us your trade machine ID. However, if you just want to trade on Ninja, we don't need the machine ID. Okay, if you just can trade on Ninja, you don't have to bother with it. But TradingView, you really do need to get TradingView if you're going to take the trial, because that's where our indicators are. All right, the ones that we use in the room, primary ones down here, they are on TradingView, and only on TradingView. The Ultimate Slingshot and TV Traders Range Trigger are only on TradingView. If you don't have TradingView and you want to take a trial with TradingView, go back here to mytradingiq.com, click on Trading Platforms, and follow the instructions right here, TradingView platform. It's a 3-minute video. You end up clicking on this link, and that link brings you to this page. Click on monthly. The essential will work just fine. This is a 30-day trial, I believe, from TradingView. You are going to have to get real-time data. The real-time data, it costs $7 a month. It's really simple to get to. I should make a video about how to get to the real-time data for you, but to get to real-time data, all you have to do is go here. Once you get your ID, you need to give us this. Hover over this in the upper left-hand corner. It says logged into CV Trades. Whatever you're logged in as, give us what that is, okay? And then when you go here, go to account and billing. And let me hit save on this before I go there. Go to account and billing. And the thing that you're going to need to get if you're trading with, if you are trading with futures, if you're going to be trading futures, is this one right here. The CME Bot Comics NYMEX CME Group. It's $7 a month. All right, for real-time data connected directly to your charts, $7 a month. All right, that's what you need to get. And even if you don't sign up with us afterward, you still have a month of real-time data, and you still have the rest of a month of TradingView charts to play around with. All right. Now, the trades that we took. Let's look at the spreadsheet first. On the spreadsheet, we had a really good day today. It started out a little bit slow, but we did start out. We got our goal for the day early on today, and it went kind of slowly increasing, but toward the end it started to ramp up, and I got some pretty good trades at the end, as you'll see. But we ended up with plus 243 ticks on the NQ, plus 10 ticks on the Russell, 67 ticks on gold, 23 ticks on the ES, and that was it. Put us at $2,222 with one contract this morning. Today it took 3 minutes and 2 trades to get to the goal for the day. At that point, with 10 contracts on, we're at $2,300. So we ended up 10 times that by the end of the session, but we had to trade another 42 times to get there. We did 45 trades this morning. That's a lot of trades. On the month now, we're at $14,742. That is over 12 business days, averaging $1,228 per contract per 2-hour business day. On the year so far, we've gotten our goal on 32 out of 32 business days that I've worked. There were a couple more business days in there, but I wasn't able to work. I think I actually did work. I think I don't remember exactly how it worked out, but I know the DOMs are messed up on a couple of days in there, so I wasn't able to do something. But anyway, we've gone 48 business days since our last non-green day. I believe it was a yellow day in December, and 441 business days since our last red day. Right, so that's almost 2 years since our last red day. A red day means we ended negative and we did not get the goal for the day. Right, it doesn't happen very often because there's just so much opportunity. On the year now, we're at $46,920 over 32 business days, averaging $1,466 per contract per 2-hour business day. And following the 24/20 blueprint, if you were to add 1 contract per month so far this year, you would have only had to work 5.45 hours, and you would have averaged $1,342 an hour. You'd be up $7,315. Okay, you'd be on 2 contracts, up $7,315. All right. That is all that. Now let's get into the actual trades. Okay, we had a bunch of trades today, so we have a bunch to go over. Not much on gold and not much on the Russell, but oops, wait, that's not the right one. Yeah, we had a bunch on gold. We didn't have much on the Russell. Sorry, but let's just get into it. Okay, I was looking at the wrong sheet. I had made a note of myself on a different sheet. Look at all these trades that triggered in here on gold today. Now I had gold on a 7 range all morning. Look at all these things that had been triggering in here. Now the ones that we took, we have the arrows on them, all right? And we started all the way over here at the very beginning of the day. A bunch of trades on gold. All right, our first trade on gold was right here. We ended up with a +3 on that. Then I had a break even. Then I stopped out there. Now because I'm on a 7 range, I have a 10 stop, so that put me at -7. And I picked up 1 tick there to get me to I'm -6. Then 10 ticks there to get us to +4. Then a break even. Then we had a really big trade right here. We got 30 ticks on that, got us to 34. Had a break even before that. We had some news come out today. A couple of high impact events happened at different times. Actually 3 different times, I believe. But we went from where did we go, from 34 to 48 right there. And then from 48 to 34 to 48. I think actually it was 34 to 38, and then 38 to 43. That's what it was. And then I stopped out in here, went from 43 to 48, and then I stopped out, and I made a mistake on that one. And I stopped out. Right? So it went way into profit. I should add my stop at break even or not taking the trade at all. But I stopped out minus 10 ticks, brought me back down to 38. Then I went from 38 to 52, and 52 to goes over here. 52 to 67. Yeah, 52 to 67, I believe, was right here. Then we went 67 to 77, had a break even, then we stopped out there, went from 77 down to 67. I think that was the last trade of the session right there, that stop out. During the break, though, look at all the trades that triggered during the break. You know, there are all these right in here that you see with the flags on them. But the trades that triggered using divergence trades or just using the other trades. Let me talk about that for a minute. Okay. If you go here to mytradingiq.com and you look at trade rules right here, right down here, there's a thing that we went over. It might have been in here, it might have been in the morning session yesterday or the day before, but these are the trades that we do in the morning session, right? Now, what I want to talk about is the number 2 and number 3 trades. Number 1 is the one that I do most of the time. I did one number 2 trade today, maybe 2. But these two right here, the number 2 and the number 3, let's just talk about those for a second, okay? What you're looking at, you're determining the trend from your position with respect to the YBR. If you're above it, you're taking long trades. If you're below it, you're taking short trades. If you're above it, taking long. If you're below, taking short. Simple as that, okay? So when you're doing that, you don't need the slingshot down here. You're just using the trigger, all right? So when you're doing that, now you're only taking trades when they do something down here and they oversold, right? You're only taking long trades. So it's going to either come down into the oversold, in which case you'd be taking a trade as it goes in, or you can wait until it comes out. Now, the aggressive trade is obviously when it goes in, and the conservative trade is when it comes out. The difference is the conservative trade is not going to get you, you won't get hooked up in any of these flat spots like this one right here. That would have stopped you out being aggressive. But you also, will lose that extra bar that you gain right there. So that's why it's an aggressive trade, all right? There are times where the conservative trade is going to work out in your favor. You're not going to have the flat spots. And that is usually if you have a really strong trend where you're going to have a lot of flat spots. In a strong trend, you have big legs up and then the legs down are going to be bigger too. That's one way to think about it, right? If you have a big leg up, you're going to have like a big leg up right here. Then the leg down is going to be bigger. That's going to give you a flat spot. All right, think about it that way. The way the flat spots are created, you have a leg up like this, then it comes down. If you're just being aggressive, if you're just taking these trades right here, right? If you're just taking the aggressive long trade with respect to the YBR, when price is right here on a pullback, if this leg up is not very long, then this leg down should not be very long. That's when you can start thinking about these aggressive trades right here. Okay, those aggressive trades right there. But when the leg up is bigger, then the leg down should be bigger. Right? When the leg down is bigger is when you get the flat spot like that or that. You have a bigger leg down. You see that big leg down right there? This big leg down right here. That's when you get the flat spots. Now, you don't know about the big leg down until it actually happens. But if you have a big leg up, it should give you kind of a clue that your leg down should be bigger. Like this one right here, you wouldn't have had any idea this leg was going to be so big. But if you have short legs up, then you can anticipate short legs down, in which case the aggressive approach is going to work out well most of the time. Okay, you guys all follow that? So I don't think I said that in last night's meeting or at any point today. But so you can see in here all these trades that triggered, and I just totally got off track. I was going through all the trade setups, but it's good stuff to know anyway. So let's get into the Russell. Okay, in the Russell today, we had we started out right here with a plus 10. And then we had a break even, and then a minus 25. We stopped out on that one. It did end up going the direction, didn't it? No, it didn't. No, it didn't at all. It went 4 ticks into profit from the entry point. What's I doing? I was going long on that. I don't know what I did wrong on that. I guess it was this bar. Yeah, it was this bar. Yeah, I got the arrow pointing to the wrong one. It was that bar right there. But I went 4 ticks into profit. And we stopped out minus 25, so we're at minus 15 at that point. We had another break even there, and here we had a plus 25, a plus 25, and that got us to plus 10 overall. During the break, there was a short trade right here. Looks like an aggressive long trade right there that would have stopped out. And that was it. Not a lot happening on the Russell in there today. Okay. On the ES, we had a whole bunch of trades on the ES today too. Yes, a whole bunch. Let's go all the way back to the beginning. The ES is where we got the gold today. Now, mind you, we had 3 ticks on the gold at the time we got in this ES trade right here. And we got 16 ticks on that ES trade, 4 points. That's $200 a contract with 10 contracts on, $2,000 bucks. That was a nice way to start the day off today on Friday. The next trade we got was 1 tick there to get us to 17. Then we had 8 ticks to get us to 25. Then 8 ticks to get us to 33. Then 2 ticks to get us to 35. And then we stopped out down to 25. And then we stopped out again down to 15. And then we had a break even there. And we went from 15 up to 27, so we had a 12 tick gain there, then 27 to 29, a 2 tick gain, then 29 to 37, it was an 8 tick gain. Then from 37, we went to 39 for a 2 tick gain, 39 to 43 for a 4 tick gain, and then we stopped out back down to 20, back down to 33, and then we stopped out again back down to 23. We had a break even right there, and I think that's where we ended it on the ES. So the last 2 trades on the ES were 2 stop outs. The last trade on gold was a stop out. But we still ended up really well today. During the break, you can see all the numbers in here are showing on the trades that triggered using BAT setup, that on the 7 tick range, most of the time you had a chance to get your stop to break even or take profit. Okay. There was 1 time there you would have stopped out, there, and that's it. These other ones would have been nice wins. Okay, every one of those would have been a nice win. More than just the 7 ticks or the 4 ticks, because that's just what was in that bar. That 4 tick gain right there would have been a huge win. That 4 tick there would have been a huge win. Yeah, so there was a ton of opportunity in there. Okay. All right. So, yeah, so what I want to do now is bump to the next one. That was the ES. We had just a ton of opportunity was available there on the ES. Okay, in the NQ, we had a ton of opportunity on the NQ too. Now, this week, I hadn't been getting full targets on many of the NQ trades, but today I was able to get a full target on 1 and the full 75 tick target on 1 trade. But I got some bigger targets too, a couple of 40 tick trades in there. And you can see here when the news happened, I didn't even notice that it went crazy like that. Let me go here and back here, just to make sure it's printing right. Okay, yeah, I don't think it was printing right. Okay, so our first trade in here on the NQ was right there. We picked up 4 ticks on that one. And then we had a break even and a break even, and then we picked up 40 ticks on that one to get us to 44. Then we had an 8 tick gain to get us to 52. Then we went from 52 up to 56. Then 56 to 60, and then 60 to 64. So we had a lot of 4 tick gains in there. And then finally we went from 64. We had a pretty big one here, 64 up to 80. Then here we went 80 to 88, and then 88 to 120. So we're getting some bigger trades in there. Then we went from 120 up to 195. So that was a big trade right there. That was a 75 tick trade. And then we went from 195 to somewhere 243. We had another trade in there. We went from 195 to 243. It was right toward the end of the session. But you can see the numbers in here. The numbers are, getting good full bar lengths if it's starting at the bottom. If you get a 50, we're close to a 50, that means it started at the bottom, went all the way to the top. Now I'm working on a formula for you guys, well, for all of us, for me actually, but I'm working on a formula that is gonna indicate when a bar is, it's to give you confidence in a trade, really. If you start at the bottom of the bar, if you open up at the bottom of the bar, you don't know that that's the bottom of the bar until the bar closes. Like this one right here, this was the bottom of the bar all the way up to there until it went all the way down to here. Then it closed up there. So you didn't know that that was the bottom of the bar at the beginning of the bar. You don't know until the bar closes. But I'm working on something that's going to give you an indication that the bar is going to give you an up close. Okay. So if you're in a bar like this one, for instance, and the bars just start taking off from the beginning, it's going to give you an indication that you should be looking for the up close on this bar. So the reason I'm doing that is to help you manage your risk, right? If you see that indication, then you may be more inclined to loosen your stop a little bit, not be so aggressive with your stop, and let it go. The extra 50 or 100 ticks that it's got right there. Like this one had 24 ticks in it, but it went 75 ticks pretty easy right there, I think. This one had 32 ticks in it at the top, but it kept going. It's to give you an indication of that kind of bar. Like this one right here, this would have not indicated that that was going to close at the bottom. Okay, that's the kind of thing that that it would be used for, and I'm working on that. I started coding it last night. I showed today. It's in here. It's in the trigger. If you look in here, see, I made a different color bar for it, but I didn't get it working properly last night. Maybe over the weekend I'll get it done. But I am going to create alerts for those. But anyway, our trades today, we ended up with 243 ticks. 243 ticks on the NQ. So we killed it on the NQ. And a couple of really big trades. A 75 tick trade, you only need 3 of those to have a really good day. But I had one of those, and I had some 40+ tick trades too. During the break, there was just one trade right here, a long trade right there that went 30+, a short trade right here that went 50+, a long trade. This looks like a long trade right here. That went enough in there to get your stop to break even. This went 36 ticks to get your stop to break even. This was a long trade right here from the open to that bar. I don't know how far it went. It didn't trigger. And that was it. That was it today. So it was a fantastic day overall. We had a very good morning, and yeah, and so that's good stuff. All right, now let's get back to trading. There could be a short here. I don't know because I don't have this on there. This is a short here on the gold. If I can find my gold DOM, it's buried over here somewhere. It's still buried over here somewhere. Still buried over here somewhere. Still buried. Still buried. I have no idea where my gold DOM is. The only DOM I can see is my ES DOM, and that's not giving us a trade right now. So let me go find my DOMs. There is a Russell DOM. I don't know what I did during the break here to lose all my DOMs. There's the Russell. This should be something. That's the Russell. Hold it. This one. That should be the NQ. And it's not popping up. This is the gold. Okay, there's the gold. Here's the NQ. Here's the Russell. Can I still get in the gold? If it went 4 ticks into profit, so 54.0 down, oh, I can still get in it. Okay, yeah, I can still get in the gold. So there, I just shorted the gold. It's still a valid trade. The Russell, my ES chart, my NQ chart, that's the one that I'm missing. ENQ. There it is. All right, that was my NQ chart. All right, so this needs to go 4 ticks into profit. There it is, 4 ticks into profit. We'll bump that stop to break even. And now what it should do, we're not in a very good trend right here. It's kind of weak. It should go down here to 52.3. It just took me out of break even, but it should go down here to 52.3. 52.3 right here is where that should go down to. You see my totals? I didn't really even notice those totals are in there. They're black. I should make them different colors so they're easier to see. That should go down to 52.3. We ended up with a break even on it. There is almost a trade here on the NQ. So it's my ES. It's my ES DOM that I can't find. There it is. Found it. Got them all. Back in business. Okay, so the Russell's got a trade right here. Now to put this trade on, I can just click here in the green, and you see it puts me in right there at the best bid. All right. Now with this, it's got to go 10 ticks into profit, so it's going to go up to 15.5. Right here, 15.5. Now the actual best entry on that should have been right here, 14.4. So I'm at 14.5. I'm only off by 1 tick. That is not bad at all. Russell trades have been really slow coming around today. So we'll see how that works. The NQ's actually got one in here right now. Those have not been that slow coming around. So we'll see what happens with the NQ trade. I got that on right now too. Here it is. Okay, so on the Russell, we want this to get up to 15.5 to want the stop to break even. And on the NQ, we want to get up to 21.50 to get that stop to break even. Okay, and the gold's actually got a long trade here too. This trade's everywhere right now. The ES is the only thing without a trade. Okay, so this one is going to break even. Oh, I'm sorry, that's wrong. That's wrong. That's wrong. Oh, I was thinking ES. I just said ES and I was thinking ES and I went 4 ticks into profit. Okay, so we ended up with a break even on the Russell. I didn't mean to end up with a break even there, but we'll watch this one over here. Okay, so now we can go to break even on this because I had to get up to 21.50, and it did. All right, so we'll watch the NQ trade here and see how that does. And the gold trade, I can put the gold trade at break even too. Gold trade, move that to break even. All right, the NQ, I'm just going to lock in a point. On the gold trade, I'm going to lock in a tick. All right, so I end up with positive trades overall here. All right, we're out with 1 tick on the gold and 1 point on the NQ. That's a lot of trading and a flurry of trading right there. I end up with a break even on that guy. 1 tick on that one and 1 point on this one. But you see how simple the trades are, right? It's not hard to do. And I guess none of them triggered from this. Nope, it did not. All right, so we just have to wait. What time is it? It's 1:21 now. And Graham, I don't know, is Graham in here? Graham, you are in here. I'll send you a link for that meeting, okay? All right, so what we're looking for here is we'll have to get up into the overbought, then we'll sell it. That would be with the trend. Okay, same thing here with the ES. If that gets up into the overbought, we'll sell that with the trend. Same thing with the gold. If that, all of them. If they all end up in the overbought, we'll just sell them. It's not hard to do here. I'll put that. Let me slide this over a little bit like that, so you can see it. It didn't end up in the overbought. Okay, and let me make sure window is on top. And on the ES, that window is on top. If that ends up in the overbought, we'll sell it. And on the NQ, that window on top. If that ends up in the overbought, we'll sell it. Okay, so that's all you have to do. Trade 3 markets. Just be ready for it. If this bar closes up, it's going to bring this into the overbought probably by itself, and I'll just click in the red. It'll give me an entry. Okay. And we'll watch the whole thing happen, hopefully here in a second or two. There it is. I'm short. It went into the overbought. I just shorted right there. So the optimal entry would have been right here at 21.50. I'm actually in at 21.25, and I'm throwing my stop at break even. Okay, the S didn't trigger and the gold didn't trigger, but we're in the NQ. I'm going to lock in 4 ticks on that. So I got 1 point locked in, and I'm ready to take whatever it gives me. And 1 point is what it gave me. All right, and there's the S. Now the S is not up in the black. I mean, it's not up by itself. The black went with it. Now, this was something that was asked last night. I think Rico asked me this. This is the trade I would normally take. I wasn't fast enough to get it, but that was the trade I would normally take right there. Because the blue led. Blue is up there by itself. Well, pretty much by itself. I would have taken that if I had gotten a chance. But I didn't get a chance on that one. Sadly, it happened just a little bit too fast. And we're not going to get anything over here on the gold. But that's it. So we've had some pretty good opportunities. This right here on the S now. This is a counter trend long trade right here on the S right now. It's a counter trend long trade. Okay. And we right now we are looking for the S to move up. We're in a downtrend, so that makes this a counter trend trade. Okay, I got it on. Here, I'll bring it over straight. Here it is. It's counter trend trade. This is an aggressive counter trend trade. Right, it should make it up to about right here at 58.50, right there. Okay, what to expect out of a trade. Every time you put a trade on, you should know that. Okay, is it really worth it at 58.50? Probably not. But I don't know how many opportunities we're gonna have here. It's got to go 4 ticks into profit to pump the stop to break even. Okay, so it's gonna get up to the 57.75. Get the stop to break even. It should get up there. Now we get the risk off the trade. There it is. Risk off the trade, and I'm going to lock in a couple of ticks. I'll lock in 4. There's 58.50. There's 58.75. 8 ticks locked in. And bam, out with 8 ticks. That's $1,000. Nothing here, nothing here, nothing here, nothing here. Okay. You see how it had a 1 there? That means it's a 1 on that bar. But you can see, obviously, that was just the beginning, right? And the double bottom here was nice. Sitting at 100% retracement right there. We don't have a trade for this right here, but what you would expect, is that it's going to get down to here at the very least, at 57. Okay, we don't have a trade for it. But we do actually have a trade. There was an aggressive trend trade from the top of this bar, or a conservative trend trade from the open of this bar. So there are 2 types of trades for it if you take the slingshot off. The aggressive trend trade would have been from the open of this bar right here. You could have shorted it. And the conservative trend trade would be from the open of this bar right here. Right, now obviously when you have a leg this short, the aggressive trade is what's more likely going to give you the move to where it's expected to go, right here. Right, the conservative one is enough to get you stopped to break even, but the aggressive one is a little bit more. Right. See, the conservative one, you'd have your stop at break even right now. With the aggressive one, you'd be locking in like 8 or 10 ticks. And right now, it's got a counter trend trade right here. If I put this back on, yeah, it is a valid counter trend trade right here on the S going back up right now. So it made 100% retracement twice. You're in some great chop right here. This is a really nice chop right here for trading. If you want to do a counter trend trade, there's one right here that should make it up to here. Okay, because of the chop that you're in. Now, it should get up to like right here at 58, 58.50 probably, just like the last one did. 58.50, probably the same thing. Okay. It's a pretty easy trade to take. It's counter trend, of course. This one, with the trend, it's easier, but if you can do the counter trend trade, it's right there. Wow. This morning is just flown by. It's 128 right now. So if you have not taken a free trial with us and you want to take a free trial, go here to mytradingiq.com. Right here at mytradingiq.com. Click on the purple button. There's no credit card required for the trial. That's going to bring you to this registration page. On this page, all we ask for is your name, your email, and phone number. Down here, if you want to use Ninja charts for some reason, give us your Ninja machine ID. Otherwise, give us your TradingView login. Okay. get a TradingView login. Gives you TradingView login, and then we'll be able to enable your indicators on your chart sheet, indicating your indicators indicating on your charts. Okay, I was running out of time. Thought I'd do that one last time. The NQ is in some chop right here, and that's good along. Okay, and let's see, the long on the NQ, the entry should have been up here on the NQ at 1475. 1475 is where the entry should have been on that. And it gave you an opportunity to enter way down here. Okay, this ES1, I think the time it went far enough to get the stop to break even right there. I didn't get it. I didn't get either one of those. And I didn't get anything over here either. The gold, I can get the gold right here, can't I? No, I'm too late on the gold too. The gold's already gone 4 ticks in a row. Yeah, that's went 6-6. I'm too late on the gold too. All right, well, that's that. It is now 1:29:47. Guess we're gonna have to wrap it up and pass it back out. So let me do this one more time. Today, this morning, we're up $2,222 with one contract, 243 ticks on the NQ, 10 ticks on the Russell, 67 ticks on gold, and 23 ticks on the ES. Now, we just added to most of those right now. Today, it took 3 minutes and 2 trades to get to $2,300 with 10 contracts on, and we took a total of 45 trades, and we just added to that significantly too. So on the month, we're $14,742 over 12 business days, averaging $1,228 per contract per 2-hour business day. On the year, we're now at $46,920 over 32 business days, averaging $1,466 per contract per 2-hour business day. All right. If you haven't taken a trial, go here, mytradingIQ.com, click on the purple button, and fill out the form right here. That's it. With that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yep, I'm ready.
Excellent.
Okay. Last night in the workshop, you'll recall, price was right up here, and we talked about how we had resistance times 2 right above price. So the path of least resistance and the logical thing was that price would come down to the VVC and that trend line, and it's done about twice that.
Oh yeah, it's still going.
Guys,
so right there where you just had your cursor, right about there where you just had your cursor is a 50% retracement of that whole leg up.
Yeah. Coming
off a double top. That's interesting. Interesting dynamics right there.
Now,
see how the day winds up.
30-minute, we've now gone below the lowest weekly zone. So.
Oh wow.
Yeah.
Yeah, it will be interesting to see if we finish the day above that zone, because right there on that,
we're way below
that other chart
on the Dow. Really unusual week. Way below on the Russell. We're not below on the NQ yet. So, yeah. Anyway.
Wow.
Okay. Recap.
Yeah, I didn't realize how that was going on. Today, it took 3 minutes and 2 trades to get to $2,300 today.
Good job.
Thank you. Thank you.
Michael Orr, sorry to hear that.
I'm hoping he's just making a statement and that didn't happen to him.
Yeah, I think that's what he's doing. He's just making a general statement.
Yeah, okay, that's he just said not mine. He was just making a statement.
The market in general.
Good. Yes. Okay. For people who only trade in one direction.
All right, guys. All right. Michael, have a good weekend.
You too, D.
Okay. All right, guys, we've covered all the markets. So, if you want to become a member, send that email to support@cfrn.net. In the subject line, I want to become a member. In the body of the email, your name, your phone number. We're not going to call you. We don't have time, but we're going to send you an email that explains everything it means to be a passport holder. And there'll be a link you can click to seal the deal. You're going to get 2 hours of live training every trading day. 9 out of 10 new traders fail because they don't have someone to teach them how to do the job. Whatever career path you choose, you need somebody to teach you how to do the job. On top of those 2 hours of interactive group training every trading day in live markets. You get private one-on-one mentoring, no extra charge. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Stocks, futures, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again, a never-ending cycle. That's why it's so important that you learn how to read the chart so that you know where to expect resistance and where to expect support. Are you going to be right 100% of the time? No, you're not. But you're going to be right about 0% of the time if you don't learn how to read a chart. You'll get the Logic 247 alerts around the clock, concierge trade alerts the second they're published each evening. Monday morning at 6:15 a.m. Eastern, you get the weekly trading zones, and you're able to attend the members-only workshop every Thursday night. Plus, you get the golden key that opens the private channels in Telegram. We got public channels, private channels, but as a passport holder, you've got access to everything. Everything a trader needs, all under one roof, one low price. All right, let's wrap this week up with our good word for the day. Who are your true friends? Proverbs 18:24. There is a friend who sticks closer than a brother. Ancient Roman writer Marcus Cicero said friendship improves happiness and abates misery by the doubling of our joy and the dividing of our grief. The fact is, it's impossible to have more than a few close friends because true friendship takes time, attention, and commitment. Proverbs 18:24. One who has unreliable friends soon comes to ruin, but there is a friend who sticks closer than a brother. The hallmarks of real friendship include these. Number one, trust. American philosopher Ralph Waldo Emerson wrote, "The glory of friendship is not in the outstretched hand, nor the kindly smile, nor the joy of companionship. It is the spiritual inspiration that comes to one when he discovers that someone else believes in him and is willing to trust him." Number two, giving and receiving. Sometimes one person will be the primary giver and sometimes the other. But true friendships are always two-sided. Number three, sharing your lives. Blind and deaf American author Helen Keller said, "My true friends have made the story of my life. In 1,000 ways they have turned my limitations into beautiful privileges and enabled me to walk serene and happy in this shadow cast by my deprivation." Number four, mutual enjoyment. In a true friendship, you spend time together just for the joy of it. What you do isn't necessarily of significance. Unfortunately, the busyness of life makes us forget what a joy this can be. And number five, respecting one another. How do you build respect? By not letting obstacles or circumstances become more important than the relationship. When the pressure is on, you continue to treat one another with patience and kindness. And when the relationship is struggling, you work to preserve it. And that's our good word for the day and for the week. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.